Imagine growing your wealth starting with just $1. It sounds impossible, right? But today, I'll show you how this simple investment strategy can actually outperform some of Wall Street's top experts. We'll dive into how micro-investing works, why it's so effective, and how you can get started right now. Before we begin, make sure to like this video, subscribe for more fact-based investing tips, and drop a comment below if you've tried micro-investing or want to learn more about it. What is the $1 investment strategy? The $1 investment strategy leverages micro-investing platforms like Acorns, Stash, and Robinhood. These platforms allow you to invest as little as $1 by purchasing fractional shares of major companies like Apple, Amazon, or Google. So, instead of needing hundreds or even thousands of dollars to buy a full share, fractional investing lets you buy just a small portion of a stock. For example, if one share of Amazon costs $3,000, you could invest just $1 and own a fraction of that stock. Research insight. A report from Charles Schwab shows that 35% of new investors are opting for fractional shares due to their affordability and ease of access. This makes investing accessible to everyone, even if they only have small amounts to start. Source: Schwab Investor Insights. Why Wall Street experts don't always win. You might assume that professional investors with all their resources and years of experience would always outperform everyday investors, but that's not necessarily the case. Studies by Standard & Poor's show that over 85% of actively managed mutual funds underperform the S&P 500 over a 10-year period, source S&P SPIVA scorecard. One reason is high fees. Many actively managed funds charge hefty management fees, which eat into returns. Meanwhile, the S&P 500 is a low-cost index fund that doesn't require constant buying and selling, which helps investors earn more over time. Fact-based tip: lower fees and long-term consistency often outperform complex strategies. Micro-investing, with its low or no fees, eliminates the costly overhead associated with active management. The power of compounding: how small investments add up. Now you might be asking, can investing just $1 really make a difference? The answer is a resounding yes, and that's thanks to compound interest. Compound interest allows your money to grow over time by earning returns not only on your initial investment, but also on the returns that investment has already generated. The more you invest, and the longer you leave it invested, the more it grows exponentially. Example: the U.S. Securities and Exchange Commission, SEC, explains that investing even $50 a month at an average return of 7% can grow to over $58,000 after 30 years. Source: SEC Compound Interest Guide. That's the power of compounding. Small amounts grow over time, and they snowball into much larger sums. Platforms like Acorns take advantage of compounding by rounding up your purchases and investing the spare change, helping you grow your investments consistently. Real-life success stories of $1 investors. Now let's talk about how people are seeing real success with micro-investing. One user of Acorns started with just rounding up spare change on everyday purchases. Over a few years, that small change grew into a portfolio worth thousands of dollars. This success didn't come from any risky or major investment decisions, but from the power of consistency. Data insight. According to NerdWallet, over 80% of micro-investors report positive experiences, citing ease of use and automation as key benefits. Source: NerdWallet Micro-Investing Review. The ability to automate investments is a huge advantage because it eliminates emotional decision-making, which often leads to poor investing choices. How to get started with $1. Today, if you're ready to start investing with just $1, here's how to get started. Choose a micro-investing app. Popular apps like Acorns, Robinhood, and Stash make it easy for beginners to start investing. Each app provides simple setups and guidance for new investors. Set up automatic transfers. One of the best ways to ensure you invest regularly is by setting up automatic transfers. For example, you can set up your account to invest $1 per day or week, and the app will automatically handle the rest. This ensures consistency and removes the temptation to time the market. Invest in fractional shares or index funds. Once you're set up, you can invest in low-cost index funds or fractional shares of major companies. Index funds like the S&P 500 provide a diversified portfolio, reducing risk while still offering solid returns. Fact-based tip. A study by Vanguard found that automating your investment significantly increases your chances of success. By automating contributions, you avoid the emotional decisions that often lead to buying high and selling low. Source: Vanguard Investment Automation Study. So, there you have it. The $1 investment strategy is simple, effective, and backed by solid research. You don't need a lot of money to start building wealth. By keeping your fees low, investing regularly, and taking advantage of compounding, you can grow your wealth over time, even if you start with just $1. Ready to take control of your financial future? Start small, stay consistent, and let your money grow. Thanks for watching. Don't forget to like this video, subscribe for more investing tips, and drop a comment below with your thoughts on micro investing.